Speaking of financials, we take a look now at hiring trends in the financial industry. While some firms like Goldman, Barclays, and Bank of America are planning staff cuts, others are adding jobs. Well, Sandy Gross is founder and managing partner of Pinetum Partners, an executive search firm that specializes in senior level placements in hedge funds, investment banks, as well as securities firms. Well, she joins us now with her current take on hiring trends. And Sandy, great to have you on Fast Forward. Welcome.
Thank you so much.
It's a wild ride today on Wall Street, certainly. And you know that from the sort of executive search and hiring perspective, a lot of job cuts, but there are some hiring. So give us a lay of the land.
Right, absolutely. It's been a rocky ride, I'd say, but I think the numbers that came out today are an indication that things are going to become more positive. We are seeing that the large banks, and it's been announced that RBC or RBS, HSBC, and Nomura have made big cuts, and I think that when we see these large banks that are publicly owned firms, they need to reduce costs to increase their margins. So we're seeing cuts at the most senior levels, and I think it's giving an opportunity for middle level and more junior bankers per se, greater career path and opportunities as they see it.
But so at some of these investment firms, it's a real opportunity for the folks that are sort of not at the top rung of the firm, but a little lower down.
Right, exactly. So a lot of people are saying, well, where are those more senior bankers going? And a lot of them are going to privately owned firms, or they're starting up their own firms. So it's actually interesting today when the ADP payroll numbers came out. I think what's interesting is that what we don't really capture all the time are the small businesses, service firms, where some of these people are not actually reporting that they are now employed. So we're seeing a trend, I think, that people are going to smaller firms, and it's not actually been reported.
Well, an interesting thing is, because we do talk about the hedge fund industry here, of course, and it seems like we've been talking about people not knowing where to put their cash anymore. One place that I think money is starting to flow into are these hedge funds. We had a guest on just last week talking about the turnaround in hedge funds for this year. Are they cherry picking some of the best and the brightest out there, with so many proprietary trading desks in question, winding down? We certainly have followed Goldman.
Right.
They're winding down of their proprietary trading operations. Are some of these hedge funds really picking up some big talent?
Absolutely. We've seen just recently a number of prop traders leave Bank of America and go to Millennium. And then I think it was last year, a number of prop traders left Citigroup and they went to more capital. So we're seeing people leaving prop trading and going to, I'd say, the more established, diversified, multi-strategy hedge funds that are well capitalized and can take in these, talented professionals.
So let's just go through the types of funds. You said the multi-strategies. So these are funds that usually have several different strategies, both on the equity and the fixed income side.
Exactly. We're also seeing long-short equities in different industry sectors, technology and energy, and also the long-only funds. I think people are looking to put their money back into safe havens. Index funds are becoming very popular.
And are they hiring just really at the senior level or across the board?
I think that they're hiring across the board. They're being very selective. So I think if a company already has a strategy in place, this might be the time to actually add support. Or if they are a well-funded firm, they can actually afford to bring in a more senior person to run a strategy, or create a new type of a product off of something that's already been offered.
And then, Sandy, let's quickly go through where those jobs are. Are a lot of these really in analytics? Or are they more, compliance is an area where even Wall Street is adding, where, traditional investment banks are adding?
Exactly. I think that there's a huge demand, mostly in infrastructure right now. There's always the demand for portfolio managers and analysts, but we're seeing sort of this bucket in compliance, risk management, and also investor relations that's going to work very closely with legal to make sure that there's the accurate communication to their clients and investors. And I think that for hedge funds to do business today and to retain their large institutional investors, they need to show that they're taking all the right steps to become compliant and that they've got people in place that have that expertise.
And then very quickly, compare today's compensation or expectation for compensation versus sort of pre-crisis levels.
Right. So it's been sort of a cycle. When we ask people what their compensation is, we're actually asking them their historical compensation. It's been a roller coaster. There are people that have made just a couple $100s to several $1 million, and then they're back down to a base salary without having had a bonus for a number of years. We started to see compensation come back up last year. But I think it's not going to hit those real highs that we've seen in like '05 and '06 and '07. There's going to be a little bit more stabilization. And we're also seeing that hedge funds and mutual funds that may be newer to the market are becoming a little bit more savvy in terms of how they're going to retain their employees with deferred compensation as well.
All right, Sandy, pleasure to have you here on Fast Forward. Thanks for joining us. That was Sandy Gross of Pinetum Partners giving us a look at both the hedge fund industry and the financial industry.